Hello. Good evening, guys. Is the audio and video clear to everyone? Can you please confirm? Is the audio and video clear to everyone? Is the audio and video clear to each one of you? Please let me know in the chat box. Okay. Is the sound volume coming properly? Wonderful. Okay. So let us start the third class of ACCA. Okay. Now, just a minute. Yes. So in the last session, we were discussing about IAS 16 property, plant and equipment. Okay. And we have studied some portion of it. So what will be the strategy of our classes will be, first of all, we'll revise the previous class and then we'll proceed further to the next subsequent topics. Okay. Now, as I can remember, I told all of you to revise whatever we have discussed. Come on, guys, tell me, each one of you, did you revise the topics? Did you revise the topics? Come on, tell me. Did you revise? NNA has revised. Very good, very good. Those who have revised, wonderful, great job, great job. For those who have not revised, let me tell you. For those who have not revised, let me tell you. Guys, you should revise it regularly. Okay, if you want to be in the top list of the students who have scored the top notch marks, then you should revise it regularly. Okay, you should revise it regularly. Okay, now chalo, let us move further to the next topics. But before that, we will firstly revise whatever we have studied so far. Now, in the previous class, we were discussing about what is the meaning and classification of property, plant and equipment and investment property. So come on, guys. Firstly, can you please help me with the previous discussions? Now, as I told, assets are of two types, non-current assets and current assets. Now, non-current assets are of multiple types. One is tangible assets, intangible assets, financial assets and other non-current assets. So we are not discussing about others, we are just discussing about non-current tangible assets. Now in the non-current tangible assets, we have two assets, property, plant and equipment and investment property. Now how to assess whether this tangible asset is a property, plant and equipment or an investment property? So for that, we need to first of all go through the definition. What is the definition of property, plant and equipment? The definition says property, plant and equipment are tangible assets having life more than one period and it is held for production or supply of goods or services, production or supply of goods or services, or admin purposes, or rental to others. But now when I'm saying rental to others, can you please complete this statement? Can you please complete this statement? When I say rental to others, you have to write in the bracket excluding property, because if the property is given on rental to others, it is called as investment property. I believe this is very much clear to all of you. Now further, what is the definition of investment property? So investment property includes land, building, both or a part thereof held for rental to others or capital appreciation or both. So this way we have very well understood the meaning of PPE and IP, and I think we can very well classify what exactly is coming under the scope of PPE and what exactly is coming in the scope of investment property. Now moving further. So now we discussed about the recognition principle. What is the meaning of recognition principle? So meaning thereby, okay, we understood that this is a property, plant and equipment. Shall we recognize this in our financial statements? So for this, that we discuss a recognition principle. Now recognition principle has two conditions. If both the conditions are satisfied, we recognize the property, plant and equipment in our SOFP. Now what are the two conditions? It is probable that future economic benefits will flow to the entity. Second, cost can be measured reliably. Now, if both the condition, see, mark my words, if both the conditions, okay, there is an and If both the conditions are satisfied, then yes, we can recognize the property, plant and equipment in our financial statements or SOFP. If either of the conditions are not satisfied, then we cannot recognize the same. Guys, I'm not liking it. You guys are not actively commenting on the chat box. Please come on, all of you. Come on, guys. Come on. Why not active? Come on, be active in the class, guys. All of you, come on. And also, you're not liking the video. That is also wrong. Please like the video as well. Okay. Now, this is what is a recognition principle. Now, after a recognition principle comes the concept of measurement principle. Now, what is the meaning of measurement principle? So, measurement principle says that if at all we have to recognize a property, plant and equipment in our financial statements, then comes the question, at what value? At what value? And that is what is called as measurement principle. Now, for measurement principle, we have to study it at two stages. One is on the date of purchase, that is initial measurement. Come on, guys, tell me. At initial measurement, we measure the property, plant and equipment at what value? Tell me. We measure the property, plant and equipment at what value? Come on, tell me. At initial measurement, we value the property, plant and equipment at what value? Tell me, come on. What is the measure? Cost. Very good, Yamini. Very good, Yamini. Okay. It is measured at cost. It is measured at cost. Now, subsequently, it can be measured at cost or revaluation, which we have to discuss going forward. Okay. Now, come on, guys. Can you please tell me what are the four components of cost? Can you please tell me what are the four components of cost? One is the purchase price minus trade discount or rebates. Then adjusted it for, tell me what do we need to add? Non-refundable taxes we have to add. Non-refundable taxes or import duties or custom duties. Okay. Then what? Any other directly attributable costs incurred to bring the asset in the location and condition intended by the management. Then what? Present value of the decommissioning, removal or restoration costs. Present value of the decommissioning, removal or the restoration costs. Now tell me, is it clear everyone till here? Now going forward, we also discussed about present value of decommissioning, removal or restoration costs. Can you please tell me what is the treatment of present value of decommissioning, removal or restoration costs? So understand, this DRRC is incurred at the end of the useful life of the asset. But since this cost enables the main asset to be operated and generate future economic benefits, hence we need to capitalize this cost to the cost of the asset. But how? They will be incurred going in the future at the end of the life of the asset. So we have to calculate the present value of it. We have to calculate the present value of it and capitalize. We have to calculate the present value and capitalize. So what is the journal entry while capitalizing the provision for DRRC? So the entry is asset account debit to provision. Asset account debit to provision. Okay. Now subsequently what will happen? We will depreciate the asset over the life of the asset. We will depreciate the asset over the life of the asset. We will unwind and record what? Come on, guys, tell me. We will unwind and record what? We will unwind and record what? Finance cost or finance income? We will unwind and record what? Finance cost or finance income? When we unwind the provision for DRRC, we record what? Finance cost. Very good, Karthik. Very good, Yamini. Very good. All of you. Wonderful. Now, so we unwind the provision and record finance cost, and we record finance cost, and ultimately at the end of the life of the asset we pay off the provision. So this was the overall treatment of DRRC. Is it clear? See, now we spent just 10 minutes. Okay, and we revised entire thing. Tell me, was it helpful? Come on, guys, tell me. Was that helpful? So in the previous class, we studied about meaning, we studied about recognition, we studied about asset, we studied about initial measurement, we studied about meaning of costs. Now tell me, is it clear? Okay, now I am moving further in my class. Okay, now come on guys, all of you, let us take a pledge. Let us take a pledge. All of you, come on, do it like this. In school, we used to do, no? I pledge so and so and so, right? So let us take a pledge today. Come on, guys, tell me. Are you all ready to take a pledge with me? Let us take a pledge. I take your name. I take your name. I will revise every day whatever is taught in the class. Before coming to the next class, I will revise every day. Plus, I will solve all the assignments given in the class. Come on, guys, let us take this pledge. All of you. Will you do that? Will you do that? Okay, now tell me one thing. Tell me one thing. When you enrolled for the paper, when you enrolled for the paper, tell me, what is your objective? To score just pass 50 marks? To score just 50 marks? What is your objective? Tell me. Just 50? What is your target? I want to know your targets. Come on, guys, all of you. Very good, Yamini. I'm proud of you. All of you, come on, let me know your targets. How much do you want to score? $75 plus. Okay. Rank. Now, okay. Being a rank holder myself, I can tell you, if you want a rank, and I believe everyone should target a rank. I believe everyone should target for a rank. Okay. Now, the first trait of a rank holder, is they do consistent studies. Consistently. Okay, consistency is the key. Okay, so you have to revise everything consistently on a daily basis. And you know what? My dear friends, see, my classes duration is of around 2 hours, right? Now, revising this class of 2 hours will take you around 20 to 30 minutes. Tell me, do you agree or not? Revising this class of 2 hours will take you hardly 20 to 30 minutes if you revise it immediately after the class. But if you revise it 1 week after, it might take up 1 hour. If you revise this class after 15 days, it might take you 2 hours. If you revise after 1 month, it might take you 4 hours. If you revise after 1.5 month, you might not be able to revise, or you have to watch the lecture again. Choice is yours. Choice is yours. So keep on revising, keep on revising, keep on revising, keep on revising. Okay, chalo, I'll proceed further now. Now, in the meaning of costs, okay, IS has given you certain inclusions or exclusions. In the meaning of cost, IES has given you certain inclusions and exclusions, which I am not talking as of now, okay? Because it will just lead to going in depth into a particular topic. So what I'll do is I will discuss it. But first of all, I want to complete the rest of my standard, and then I'll come back to this again. Why, sir? Why this approach? Because when I'll complete the entire standard, you know what? You will be able to understand the relevance of these inclusions and exclusions. Okay, so first of all, I will complete the entire standard, okay, of IAS 16, and then I'll come back to this topic again, and we'll discuss about the inclusions of cost and exclusions of cost. Okay, don't you worry at all about that. Now, so now I'm moving on to the subsequent measurement. I'm moving on to subsequent measurement. Now understand. Guys, I have sent you the notes in the WhatsApp group. I've sent you the notes in the WhatsApp group. Okay. Now, by this weekend, that is Sunday, what I'll do is I will integrate all the notes and the classes in your portal itself, so that you can see the notes and the classes, everything in the portal itself. You need not worry about notes or classes. No need to worry at all about that. Okay. I'll integrate everything. Subsequent measurement. Okay. Now, what is the meaning of subsequent measurement? That is over the, guys, can you please just confirm me one thing, because yesterday one of the students wrote in the comment that the voice is not coming properly, and I checked that video also and I found that yes, exactly, the video voice was not coming properly. Is the voice coming properly today? I have got all my system reviewed. Is the voice coming properly today? Can you please confirm, guys? Thank you, Yamini. Okay, a many thanks to that student for commenting on that. Okay, so that I got to know about that issue and I got it rectified. Thanks to that student. Over the useful life of asset. Over the useful life of the asset. Now, let's suppose. So standard says that subsequent measurement can be done at cost model, or it can be done at revaluation model. It can be done at revaluation model. Okay, either ways. Now, I'll explain each of these individually. Okay, this is the part A of my discussion and this is the part B of my discussion. So let us discuss individually. Part A, cost model. Now what happens is, let's suppose I purchased an asset for $100 million. For $100 million, and the life of the asset is 5 years. And the life of the asset is 5 years. Okay. So now what does the cost model say? Cost model says that we have to depreciate this entire 100 million over 5 years. Okay, we have to depreciate the entire 100 million over 5 years and record the asset. Okay, now the depreciation can be done using multiple methods, straight line method or written down W method or production units method or machine hour rate method. Okay, but now for the sake of simplicity, I am considering straight line method. For the sake of simplicity, I am considering straight line method. Now, what does the straight line method says? Depreciation will be equals to 100 by 5 is equals to 20 per year. 20 per year. So now for the 5 years, how will I record the asset? 1, 2, 3, 4 and 5. So my depreciation is 20 and the carrying amount of the asset becomes 80. Now again the depreciation is 20 and the carrying amount of the asset becomes 60. Now again the depreciation is 20 and the carrying amount of the asset becomes 40. Again the depreciation is 20 and the carrying amount of the asset becomes 20. Again the depreciation is 20 and the carrying amount of the asset becomes nil. This is what is called as the cost model, measuring the asset at its depreciated cost. At its depreciated cost. Tell me, is it clear? Is the cost model clear to all of you? Come on guys, tell me, is the cost model clear to all of you? Is the cost model clear to all of you? Okay, now moving on to a revaluation model. Revaluation model, guys, you need to tell me, okay, at every stage whenever I ask, you have to tell me that sir, yes, it is clear. Okay, because I will wait for your affirmation. Okay, it is then only I'll move ahead in the next topic. Now, revaluation model. Now, what a revaluation model does is, let's suppose I purchased the asset at $100 million and the life is 5 years. Why use only SLM in cost model? No, Yamini, I didn't say that in cost model we will use SLM only. No, not that case. It can be done at depreciation, can be done at SLM. Depreciation can be done at WDV. It can be done at machine hour rate method. It can be done at production units method. Okay, it can be done using any method. Okay, but for the sake of simplicity of explanations of calculations, I have considered here SLM. I have considered here SLM. Okay, but the depreciation can be done using any method. Okay, now from an exam perspective also, Yamini, from an exam perspective also, if the question is silent, we use SLM. If the question is silent, we use SLM. Is that clear now? Chalo. Let us discuss a revaluation model. Now, cost of the asset was 100 million. Life is 5 years. Life is 5 years. Okay. So, ideally, what we'll do? We will depreciate the asset over 5 years minus 20. Carrying amount becomes 80. We will depreciate 20 and the carrying amount becomes 60. Now, since the asset is under a revaluation model, we need to revalue the asset to its fair value. Sir, now what is this fair value? Come on, please ask me. Sir, now what is this fair value? So, fair value, okay. Guys, I am deviating from my topic a little bit. To give you a basic understanding of what exactly is fair value, though there is a complete set of standard, that is IFRS 13 on fair value, and I'll discuss it also, but not now. But just to give you a brief understanding of what is fair value, I'm deviating from my topic a little bit. Okay, now let's suppose this is a mobile phone. Okay, can you see this mobile phone? Okay, now this is a mobile phone. Okay, now this mobile phone, let's suppose I purchased it 2 years back. Let's suppose now I purchased it for $1,000. Okay, I purchased it for $1,000. Now, if I want to sell this mobile phone now, will I receive $1,000? Tell me. If I go and sell this mobile phone today, will I receive $1,000? Tell me. Come on, guys, tell me. Definitely no, right? So now the standard of fair value says that what is the price that you will receive if you sell this asset. What is the price that you expect to receive? Okay, in an orderly transaction. What is the meaning of orderly transaction? Let's suppose, ideally if I sell it to someone, if I sell it in a market price, let's suppose I am assuming that I will get $400. Okay, but what happened now? Let's suppose Karthik came to my home and on gunpoint, sir, you have to give this mobile phone to me for free. I gave him for free. So now that is the fair value of this mobile phone 0 because I gave it to him for free? No. Orderly transaction means under no influence, no biasness, or I gave it to my brother for free. Okay, now, so is the fair value of this mobile phone zero? No. So fair value means if in a marketplace I go and sell this mobile phone, what is the value which I will receive? That is called as the fair value. That is called as the fair value. Book value and fair value is same? No, Devendra. Book value means what? I purchased it for $100. The depreciated cost is called as the book value. Fair value means what? Fair value means what? The price at which I can sell this asset in a market. So now see, this $60 is your book value, Devendra. This $60 is your book value. Now fair value can be $90. Fair value can be $90. Tell me yes or no. Fair value can be $90. Tell me, is that clear? Are you understanding the difference of book value and fair value, Devendra? Are you understanding the difference? Very well. Now tell me, what is the fair value gain that you earn? What is the fair value gain? What is the fair value gain? 30. Now remember my first class and tell me. Remember my first class and tell me. This fair value gain, am I going to realize this fair value gain at any given point of time? Am I going to realize this gain of 30 any given point of time? Tell me, do I intend to sell this mobile phone? No, I want to use this mobile phone. Till the time it has life, I will keep on using it, keep on using it, keep on using it. Now tell me, will I ever realize this fair value gain of 30? No, no. But I have this gain. So can I recognize this gain in P&L? Can I recognize this gain in P&L? No, I can't. I can't, because this is not my actual gain. This is not my actual gain. It is a gain just to increase the value of the asset to its fair value. So I will not be able to recognize it in P&L. Rather, I will be recognizing it in other comprehensive income. Other comprehensive income. So what will be the journal entry which I will pass here? The journal entry which I will pass here is, I will increase the value of the asset. I will increase the value of the asset and transfer the gain to other comprehensive income. 30. Now, what was the life? Tell me, what was the life of the asset? 5 years. How many years has passed by? 2 years. So how many years are still remaining? 3 years. 1, 2, 3. Now tell me, what will be the depreciation of this year? Can you please tell me? What will be the depreciation of this year? This is year end 1. This is year end 2. This is year end 3, this is year end 4, and this is year end 5. Now I need to know what will be the depreciation of year 3. Can anyone try and tell me, guys? Guys, even if you're making mistake, I am completely okay with that. Even if you're giving me a wrong answer, I am completely okay. But what I want is all of you should give it a try. Okay, in the fear of wrong answer, if you're not trying also, that is a mistake. That is a mistake. Very good, Yamini. Very good, Yamini. 90 by 3, that is 30. Very good, Karthik. Very good, Andrew. Very good, very good, very good. Those who are trying are the ones who will succeed. Okay, now, so understand, after revaluation, what is my value of the asset? After revaluation, what is the revised carrying amount of the asset? After revaluation, what is the revised carrying amount of the asset? It becomes 90. What is the remaining life of the asset? 5 years was the life, out of which 2 years already passed. So remaining life is 3 years. So what will be the subsequent depreciation? Subsequent depreciation will be 90 by 3 is equals to 30 per year. So depreciation will be now 30, 30, 30. So now 90 minus 30 is carrying amount is equals to 60. Carrying amount is equals to 30 and carrying amount is equals to nil. Carrying amount is equals to nil. So now tell me, are you understanding the cost model and the revaluation model? Tell me. Are you understanding the cost model and revaluation model? Come on guys, please tell me. Come on guys, tell me. Okay. Now comes the question. Now comes the question of choice of cost model or revaluation model. Choice of cost model or revaluation model. Now my question here is okay, we understood what is cost model, we understood what is a revaluation model. Comes the question, now how will entity know whether we have to apply cost model or we have to apply revaluation model? How will the entity get to know about that? Is there any direction? Is there any direction given in the standard? Is there any direction given in the standard? So the standard says the choice of cost model or revaluation model is with the entity. The choice of cost model or revaluation model is with the entity. So who has the choice? The choice is with the entity. Entity. The entity, that is the company. The entity, that is the company, has the choice which model they want to use. They want to use cost model, okay, go for cost model. They want to use revaluation model, okay, go for revaluation model. But now think of a practical situation. Okay, think of a practical situation. A company may have multiple assets, hundreds of assets. A company may have multiple assets, hundreds or thousands of assets. Now, so will entity for some assets cost model, for some assets revaluation model, will that be logical? Tell me, will that be logical? No, no, no. So what entity does? What entity does is, understand, entity might have thousands or lakhs of assets. So what entity does is, entity groups the asset under various classification or class of assets. What can be the class of assets? Understand. Class may be plant and machinery is one class. So all the plant and machinery is coming under this class. Class can be computer, no, not computer, you can say office furniture. So all the office furniture is coming under this category. Class can be building. So all the buildings are coming under this category. Okay, so these are called as class of assets. Now how do we determine the class? How do we determine the class? Okay, so standard says class means assets of similar nature and similar use are grouped into one class of assets. Entity has a choice on the basis of class of assets. Now what is the relevance of it? Let me explain. So now under the plant and machinery, let's suppose entity has plant machinery 1, plant machinery 2, plant machinery 3, plant machinery 4, plant machinery 5. Under office furniture, let's suppose 1, office furniture 2, office furniture 3. Building, let's suppose building 1, building 2, building 3, building 4. These are the assets which the company has. Now the standard says the choice of cost model or revaluation model is with the entity on class of asset basis. On class of asset basis. Now what does it mean? So entity, let's suppose, says that for the property, plant and equipment, for the property, plant and equipment, we will apply cost model. For office furniture, we will apply cost model, and for building, we will apply revaluation model. This is what the entity has made a choice. Now tell me, entity wants to put this plant and machinery under revaluation model. Can they do it? Tell me, entity wants to put plant and machinery number 3 under revaluation model. Can they do it? No. That option is not available. That option is not available. Entity wants to put building number 3, not 3, let us take 2. Building number 2 under cost model. Can they do it? No. This is not available. Entity wants to keep office furniture number 1 under revaluation model. Can they do it? No. Now tell me, are you understanding this part? So class of assets means what? Similar nature and use. Tell me guys, is it clear? Is it clear to everyone? Are you understanding that when does the entity have a choice? Okay, the choice of classification of cost model or revaluation model is on class of assets basis, and not on individual asset basis, Is it clear to all of you? Is it clear to all of you? Come on guys, tell me. Wonderful, wonderful. Now moving forward. See, cost model can change in the next year. Revaluation model, Devendra, I'll come to that, don't you worry. Okay, I'll come to that also. Your query will be covered in the subsequent class, not now. Okay, we'll come to that. Okay, coming to revaluation model. Now that once we have made the choice of a revaluation model, okay, so now there are few things which we need to study about a revaluation model. What are those things? Point number 1. Okay, what is the frequency of revaluation? Will we revalue every year? Second point, whenever we revalue, what is the treatment of revaluation gain or loss? Point number 3, what is the treatment of a revaluation surplus? Okay, now this is what we have to study about a revaluation model. Point number 1, frequency of a revaluation. So let us come to the standard now. Frequency of a revaluation. Now, when do we need to revalue? So now the standard says whenever the carrying amount or the book value of the asset differs materially from the fair value of the asset, it is at that point of time we have to revalue the asset to its fair value. we have to revalue the asset to its fair value. Okay, it's not the case that we have to do the revaluation every year. No, there is no hard and fast rule to revalue every year or to revalue alternate years. No, there is no such hard and fast rule. The standard has been very much lenient, okay, and very much giving the judgment to the accountant. Now, what is judgment given to the accountant? You revalue the asset when you believe, you revalue the asset when you believe that the carrying amount of the asset differs materially from the fair value of the asset. If there is a material difference between carrying amount and the fair value, you revalue your asset to its fair value and record the revaluation gain or a loss. Record the revaluation gain or a loss. Now, this is the first point. This is the first point. Now, generally, in general, no hard and fast rule. Generally, it is done once in 3 to 5 years. Generally, it is a general statement given by the standard, not a hard and fast rule. Generally, it is done once in 3 to 5 years. Further, it goes on to state, if fair value experiences significant and volatile changes, if the fair value is like this, right, increasing, decreasing, increasing, decreasing, increasing, decreasing, or significantly increasing, increasing, and it is increasing significantly and continuously, then in that case, if the fair value experiences significant and volatile changes, then annual revaluation might be needed. Are you understanding the frequency of revaluation? Are you understanding the frequency of revaluation? Come on, guys, tell me. Is it clear, everyone? Wonderful. Now comes the treatment of revaluation gain. Though the treatment of revaluation gain I have written here, but I believe this thing is very important for you. So I will, even if it is written, I will again draw the diagram and explain it to you. Okay. Now, treatment of revaluation gain. Treatment of revaluation gain or loss. So now understand. Case 1. Now, when we do the revaluation for the very first time, guys, this is a very complex area. This is a little bit a complex area. I will recommend all of you to listen to me properly. And after explaining the theoretical concept, I'll take up around 5 to 6 examples so that the concept becomes very much clear. Okay, but be very much attentive in the class. This is a very important concept. Okay, generally I have seen a question from this coming up in the exam. Now, when we revalue for the very first time, tell me, it can be a revaluation gain, or it can be a revaluation loss. Anything can happen, right? Need not be a revaluation gain only. It can be a revaluation gain or it can be a revaluation loss. Either of these. Either a gain or a loss. Now, understand, if there is a revaluation gain, I will record it in other comprehensive income. Okay. Now, understand. But if there is a revaluation loss, ideally, understand, if there is a revaluation loss, comes the question, do we need to record it in other comprehensive income? Tell me, do we need to record it in other comprehensive income? The answer is no. Why? So for that, let me explain one more point. Whatever is recorded in other comprehensive income, it is accumulated in a reserve called as revaluation reserve. For revaluation gain, okay, it is recorded in a revaluation reserve. Okay, now revaluation reserve. Now tell me, if we have got a revaluation loss for the very first time, do we have the balance in any balance in revaluation reserve? Tell me, do we have any balance in revaluation reserve? Come on, tell me. Do we have any balance in revaluation reserve? No, we don't have any balance. So from where to adjust? We won't be able to adjust. And for that reason, what we will do is we will not be taking it to OCI. Rather, we will take it to P and L. We'll take it to P and L. We'll take it to P and L. Now, this is the first time. First time revaluation. First time revaluation. Now let us talk about subsequent revaluation. Subsequently, let's suppose subsequently we have a revaluation gain or might be again a revaluation loss. Okay, then what will happen? Subsequently, if we get a revaluation gain, tell me where will we record this revaluation gain? Tell me where will this record this revaluation gain? Where will we record this revaluation gain? Come on guys, tell me. We will record it in other comprehensive income and accumulate in revaluation reserve. Tell me yes or no. Tell me yes or no. You need to confirm if everything is clear till here. You need to confirm if everything is clear till here. Then I'll move forward. Now, though I have not explained, but I'm asking you guys, please apply your logic and tell me. Subsequently, if you have a revaluation loss, where do you think this revaluation loss will go? Subsequently, when you have a revaluation loss, where do you think this revaluation loss will go? Come on guys, please tell me. Where do you think this revaluation loss will go? Very good, Yamini. Very good, Karthik. Very good, Hafsa. Okay, Laksh, Devendra, and Andrew. You are wrong now. Okay, it is good that you have made a mistake. So let me explain now. This revaluation loss will not go to P&L. Why? Because now we have balance in revaluation reserve from where we can adjust this revaluation loss. We have the balance in revaluation reserve. We have the balance in revaluation reserve from where we can adjust this revaluation loss. Okay, so now what I will write here is, please listen to me carefully. Okay, adjust. Okay, this revaluation loss will go to other comprehensive income. Okay, adjust to OCI to the extent there is a balance in revaluation reserve. Any excess revaluation loss will go to P and L. Do you want me to take up a question on this one? Do you want me to take up a question on this one? Okay. Let us take up a question. Example. Okay, now let's suppose we have a revaluation gain of 20 first time. Tell me, where do you think this revaluation gain will go? Where do you think this revaluation gain will go? other comprehensive income, and it will get accumulated in revaluation reserve. So in other comprehensive income, we'll record 20. Okay, and we'll accumulate this 20 to revaluation reserve. Now again, we did a revaluation and we got a revaluation gain of 40. So now tell me, what will we do? We'll record this revaluation gain of 40 in other comprehensive income and we'll accumulate the same in revaluation reserve. So in the revaluation reserve, the balance will become 60. 20 plus 40, 60. Okay. Now again, we get a revaluation gain of how much? 30. Okay, so where will we record other comprehensive income? 30, and we will adjust with the, okay, now we'll record the in the revaluation reserve. It will become 90. It will become 90. Now what happens? We get a revaluation loss. We get a revaluation loss. Just give me a minute, please. We get a revaluation loss of how much? 70. Of how much? 70. Now tell me, where will this loss go? So we will adjust this loss from other comprehensive income, and now my revaluation reserve will also get adjusted. My revaluation reserve balance will become 20. My revaluation reserve balance will become 20. Is that clear? Now again, let's suppose here again I get a revaluation ka loss of 30. Now tell me, what will be the treatment? Now tell me, what will be the treatment? Come on guys. Now tell me, what will be the treatment? What will be the treatment now? Come on guys, tell me. How much will we record in other comprehensive income? 20. Very good, Yamini. Very good, Laksh. Very good. I'm literally proud of you. So now, first of all, other comprehensive income will record 20. We'll record a P&L, how much? 10, and my revaluation reserve will become nil. Bye bye. Tell me, is that clear, everyone? Are you understanding? Are you understanding this point? Are you understanding this point? Okay, now if yes, please go through this part once again and tell me if it is clear to you guys. Please go through this part once again and tell me if it is clear to all of you. Okay, now moving on to this part, we have to discuss now this part, revaluation loss. I do have space. I'll take insert a new page. So I'll drag it here. Subsequent revaluation. Now again, we can have revaluation gain or revaluation loss. Now, as you know, if there is a revaluation loss for the first time, if there is a revaluation loss for the first time, it goes to P&L. If there is a revaluation loss for the first time, it goes to P&L. Now again, in the future also, if you have a revaluation loss, tell me, first time we did revaluation loss, P&L. Second time we did revaluation, again a loss. Tell me what will be the treatment here. Tell me what will be the treatment here. Come on, guys, tell me. What will be the treatment of subsequent revaluation loss? What will be the treatment of subsequent revaluation loss? P and L. Wonderful. Wonderful. It will go to P and L. But if in the future, if in the subsequent revaluation, we get a revaluation gain, now the standard is saying, just a minute, now the standard is saying that if you have a revaluation gain now, so first of all, whatever loss you have recognized in P&L, first of all, compensate that for that. First of all, compensate for that. Okay. Now, recognize. Let me please see what I'm writing. Okay. Recognize revaluation gain in P&L. In P&L to the extent revaluation loss was earlier recognized in P&L, so that the compensation for the P&L is done, so that we are ensuring that we are not recognizing anything in P&L, neither a gain nor a loss, because for initially we recognized loss, now we are recognizing gain, so it gets knocked off. Now any subsequent, any excess gain will be recognized in other comprehensive income, from where we will accumulate to revaluation reserve. Tell me now, is it clear? Is it clear, all of you? Come on, guys, tell me. Is it clear to all of you? Come on, guys, tell me. Please. It would be impairment on P&L. No, impairment is a different concept. Revaluation is a different concept. Okay, so let's not merge these two things. Okay, so when I will move on to IAS 36, it is at that point of time I will explain what exactly is the difference between impairment loss and a revaluation loss. So let us not merge these two things. They are completely different. The treatment of them might be the same, but the concept is altogether different. Applied at different places. Okay, so let us not merge these two concepts. Is it clear, everyone? Okay, wonderful. Now, do you want an example on this also? Let us take up an example. Now, you had a revaluation loss of 20. Tell me, where will it go? P&L. Right? Now, again, you had a revaluation loss of 30. Where will it go? P&L. Where will it go? P&L. Now, again, you have here you have a revaluation gain of 10. Tell me, what will you do? Now you have a revaluation gain of 10. What will you do? Tell me now. You have a revaluation gain of 10. Tell me, what will you do with that? Will we recognize this revaluation gain in P&L? Tell me, will we recognize this revaluation gain in P&L? Will we recognize this revaluation gain in P&L or other comprehensive income? That's the question. P&L or other comprehensive income. P&L. This gain will also go to P&L. Now again here you get a revaluation gain of 60. Now tell me, how will you recognize this revaluation gain? Now tell me, how will you recognize this revaluation gain of 60? Come on guys, tell me. How will you recognize this revaluation gain of 60? Okay, let's see. Now tell me, how much with loss we have recognized in P&L? 50. How much gain we already adjusted? 10. So what is the loss, net loss yet recognized in P&L? 40. So this revaluation gain, first of all, 40. Okay, how come 40? 20 plus 30 minus 10 will go to P&L. Now what remains? What remains? 20. How come 20? 60 minus 40. This will go to other comprehensive income, from where it will accumulate to revaluation reserve. Tell me guys, are you understanding this concept? Are you understanding this concept? Treatment of revaluation gain or loss. Are you understanding this concept? Come on guys, tell me. Wonderful. Wonderful. So this completes my discussion on treatment of revaluation gain or loss. See, I have given the chart here for your understanding. I have written it here also. I've written it here also. But for your ease of understanding, see, if I would have just explained this chart, no, you would not have got that level of confidence. Tell me yes or no. So when I write it and explain, you get next level of confidence. When I write it and explain, you get next level of confidence. So I know where to use my notebook and where to write in the class. Okay. I believe so far you are able to understand each and everything I am discussing in the class. Now, one more point in this. One more point in this. Okay. I'll explain it with the help of example. One more example. So let's suppose example. It is year 3. Okay. Year end, particular year end. Now I have two assets. Asset A and asset B. They belong to same class of asset. They belong to same class of asset which opted for revaluation model. Same class of asset which opted for a revaluation model. Now under asset A, I get a revaluation gain of 80. And under asset B, I get a revaluation loss of 35. Tell me what should be the treatment. Can I say the net gain of 45 to OCI? Can I say that the net gain of 45 will be recognized in other comprehensive income accumulated in revaluation reserve? Can I say this? Tell me. Can I say this? No, I can't. Don't you think it will be a misrepresentation of facts? It will be a misrepresentation. You are not giving the due importance to this revaluation loss. You are not giving due importance to this revaluation loss. That is wrong. That is wrong. So what is the correct treatment? What is the correct treatment? The correct treatment will be this one. Okay, assuming it is first time revaluation. Assuming it is first time revaluation. Okay, this revaluation gain will go to other comprehensive income accumulated in revaluation reserve, and this revaluation loss will go to P&L. No, Laksh. Okay, understand. Now, what I wanted to prove is, understand the conclusion, the crux, the overall crux. Point number one, when it comes to selection of choice of cost model or revaluation model, the answer to that is class of asset basis. Okay, now, but when it comes to treatment of revaluation gain, it is done on asset by asset basis. Is this point clear to all of you? Come on guys, tell me, is this point very well clear to all of you? Is this point very much clear to all of you? Now, before I move further, just give me a minute, guys. Please give me a minute, all of you. Can you see this integrated question bank? Can you see this integrated question bank? Can you see this integrated question bank in front of you? Which has the questions from BPP, which has the questions from Kaplan, which has the study hub quiz questions, which has the study hub practice questions. So now I'll tell you what is the approach which I'll be using in the classes. Okay, now when I'm discussing a topic, first of all I will discuss the topic entirely. Okay, I'll use my own examples. I might use BPP's examples or Kaplan example. I'll discuss everything once the classes gets over. Okay, for let's suppose for example our property plant and equipment, once the property plant and equipment topic gets over, okay, then what you have to do is, okay, beforehand itself I will share this PDF file with you guys. Okay, the questions PDF file with you guys, and I will ask you guys to solve the questions. I will ask you guys to solve the questions. Now you have to solve the questions and come to me. You have to solve the questions and come to me. Now when you come to me with these questions, so what we will do then, is in this set of questions, I will identify all the important questions which I have to discuss in the class. Okay. So I will identify the questions which I have to discuss in the class. So first of all, I will discuss those questions in the class. I will solve the questions. I will explain the questions and I will discuss in the class. Then I will ask you guys that whatever questions you have solved, definitely in some or the other question you would have a query. So please ask me your queries. So I will take up your queries as well. So this way, whatever questions I wanted to solve, I solved it. Now whichever questions you have a query, I will take up that query also. Is this approach okay for all of you? Is this approach okay for all of you? Wonderful. Okay. Now moving to the next topic. Come here. See, I've written here. Entity cannot net off the revaluation gain and loss of different assets even if they belong to same class of assets. Is this point clear to all of you? Is this point clear to all of you? Tick mark. Now, note, revaluation gain recognized in other comprehensive income is accumulated in revaluation reserve that is forming a part of other components of equity in SOFP. Not, it is called as statement of financial position. Statement of financial position. Okay. Now tell me, is that clear, everyone? Are you understanding this? Okay, so far? Chalo. Moving to the next topic. Coming to depreciation. Guys, there are few things which I have left so far. If you want to know what are those things, I'll tell you. I have discussed with you the meaning of cost model. I have discussed with you meaning of revaluation model. I have discussed with you subsequent measurement. Now I have discussed with you the treatment of revaluation gain or a loss. Okay, now I have not discussed with you the treatment of revaluation approach. I have not discussed with you the treatment of revaluation reserve. I have not discussed with you this part. I am directly moving on to depreciation. Sir, why? See, understand, there is a sequence which we have to follow in the class. Okay. So, because I know that these things, even if I explain it now, you might get confused. So, let us follow the sequence of what I am trying to follow. Okay. So no need to worry. I will cover each and everything, that is for sure, but in a sequence which I want to. Moving on to depreciation. Now, can you please tell me, what do you understand by the term depreciation? Okay, there might be a lot of you can say methods, or you can say lot of definitions, but I want to understand, why do we depreciate the asset? Tell me the logical definition or the logical meaning. Why do we have to depreciate the asset? Some of you will say, sir, there is a wear and tear of the asset when we use the asset, and that is why we have to depreciate the asset. Okay, so now I'll ask you a question. This is a device. A very, very much hi-fi device. Okay, now I will not tell you the purpose. It is very much secret device. Okay, now, so this is the device which I have. Okay, now the life of this device is 5 years. Okay, now, in the year of purchase, in the year when I purchased this device, I didn't use the device. Tell me, if I have not used the device, is there still a wear and tear? I have not used it. It was completely kept like this. I have not used it. Tell me, is there still a wear and tear? Tell me, still wear and tear is there? No, but we have to depreciate. Irrespective of whether there is a wear and tear or not, we have to depreciate. So now this brings you to the concept of we depreciate the asset when it becomes available for use. Many a times the question will try to misguide you by telling that we purchased the asset on this date, but we put to use this asset on this date. Calculate the depreciation and tell me, from when will you depreciate? The date when the asset becomes available for use, whether or not we are using the asset. Okay, doesn't matter when we started using the asset. No, it doesn't matter at all. Irrespective of whether we are using the asset or not, we have to depreciate the asset. Okay, now, so the concept of put to use. is not relevant. Is not relevant. Okay, now the depreciation of the asset. Okay, how do we depreciate? So understand, the depreciation is done. What is the definition of depreciation? So definition says it is systematic allocation. It is systematic allocation of depreciable amount. It is systematic allocation of depreciable amount over its useful life. Now let us discuss this definition in depth. What is the meaning of depreciable amount? What is the meaning of depreciable amount? Can you please tell me? What is the meaning of depreciable amount? It means cost of the asset minus residual value. Cost of the asset minus residual value means the net cost of the asset. Okay, now what is the meaning of systematic allocation? What is the meaning of systematic allocation? It means methods of depreciation. It means methods of depreciation. Now it can be SLM, it can be WDV, it can be machine hour rate method, it can be production units method, it can be anything. It can be anything, right? Because systematically, see, we can't do an ad hoc allocation. No, this year we have used the asset a lot, so let us depreciate it by this much. This year we didn't use the asset, let us not depreciate it. No, we can't depreciate it on ad hoc basis. No, we have to depreciate on an systematically. Okay, by following a particular methods of depreciation. Now what is the meaning of useful life? What is the meaning of useful life? Tell me. I am asking a question. Let me see who can answer me. Useful life versus life. Is there any difference between these two terms? Is there any difference between these two terms? Is there any difference between these two terms? Come on, guys, I want to know. Is there any difference between these two terms? There is a difference. Understand. The life of this laptop, okay, the laptop which I'm using to take up your class, okay, the ideal life of this laptop is 5 years. Okay, is 5 years. But since I think that considering the use of my laptop, okay, considering I use it for significant number of hours, I believe that I will use this laptop for 3 years. I will use this laptop for 3 years. Okay, so now this is the useful life. So I have to depreciate. The entity has to depreciate the asset over the life. No, we have to depreciate over useful life, not the life. Is it clear, everyone? Is it clear, everyone? We have to depreciate the asset over the useful life of the asset and not the life of the asset. Okay, what is the meaning of useful life? The life over which, I like the definition of it, the life over which entity expects to use the asset. Yes, Laksh. Okay, that is called as the useful life. I believe it is very much clear to all of you. Okay, now understand the meaning of depreciation is clear. The depreciation starts. Now coming to my notes, depreciation starts depreciation is the systematic allocation of depreciable amount over the useful life of the asset. Point number one, clear. Depreciation should be recognized in P and L. Leave the further part, we'll discuss it forward. Now, methods of depreciation. Now understand a very important point. Methods of depreciation. Understand, in calculating depreciation. Okay, now tell me, what are the data that you need? Data needed to calculate depreciation. Tell me. It is the cost of asset. It is the residual value. It is the methods of depreciation, and it is the useful life. Now the entity standard says that, okay, all these three are estimates. Now, and they are subject to change. Means they might change. They might change. Now, if they change, now the standard says if they change, account for it prospectively. Now, what is the meaning of prospectively? I'll explain. Account for it prospectively. Okay, so now understand the meaning of prospectively. Let's suppose, example, here I purchased the asset of $100. Okay, I considered the residual value as $20. Okay, and I considered the life as 5 years. So now tell me, what is the depreciation for the first year? 100 minus 20 by 5, 80 by 5 is 16 is the depreciation. So what is the carrying amount here? 84. 84 is the carrying amount. Tell me yes or no. Right? Now again, second year also, I say that 16 is the depreciation and my carrying amount is, let's suppose, 84 minus 16 is 68. Now what I say is the useful life changes. Now the remaining life is 3 years, but now I say the life is only 2 years. Life is only 2 years. So what will be the depreciation? So here when the life changes, do I need to change the depreciation here and here? Will I change the depreciation for this year and this year? No. Whatever is done is done. No need to change what is already done. Prospectively means if it changes here, we will change the future values, not the past values. Okay, that what means prospectively. Now understand how will it impact. So now here I will say, okay, my carrying amount is 68. My residual value is 20. My remaining life is 2 years. So 68 minus 20, 68 minus 20 is 48, divided by 2 is 24 is the depreciation here, and 24 is the depreciation here. This is called as accounting for prospectively. Accounting for prospectively. I believe it is clear, everyone. I believe it is clear to everyone. Okay, now methods of depreciation, residual value, and useful life are all estimates and has to be reviewed at each reporting date. At each reporting date we need to review these estimates. Okay, and if there is any change in the estimates, they have to be accounted for prospectively. Further, revised depreciation will be equals to revised depreciable amount divided by the revised useful life. Now depreciation ceases, okay, when the asset is de-recognized. When the asset is de-recognized, the depreciation ceases. Now it's or is classified as held for sale. We will not be able to discuss as of now because we have not discussed the topic of held of sale. See, considering it as first topics, there might come across, we might come across few topics which we are not in a position to discuss as of now. So when we reach this standard, that is IFRS 5, when we reach IFRS 5, definitely we'll discuss this point. Okay, okay, now, so as of till then, just strike it off, not required. Okay, now depreciation does not cease when the asset is idle or retired from active use. Means if we are not using the asset, still we will continue to depreciate the asset. Still we will continue to depreciate the asset. Is that clear, everyone? Come on guys, tell me, is that clear, everyone? Is that clear, everyone? Clear? Now, component accounting. Component accounting. What is the meaning of component accounting? What is the meaning of component accounting? Let me ask you an example. Let me ask you an example. Let's suppose I have a device. Where is it? Which device to take? Okay, take it. I'll take up this device. Yes, okay. I have this device. Okay. Now the life of this device, okay, the life of this device is 10 years. Okay, the life of this device is 10 years. But inside this, there is one more device, and the life of this device is, let's suppose, 6 years. Tell me, will I depreciate the entire asset as a package over 10 years? Will I depreciate the entire asset as a package over 10 years? Or let us separate the this one and this one. Depreciate it for 10 years and depreciate this one over 6 years. Tell me, which option do you think is more logical? Depreciate separately. Depreciate separately, right? It is more logical. When we depreciate it separately, it is more logical, right? So similarly, this is what is the concept of component accounting. See here, each part of an item of property, plant and equipment with a cost that is significant in relation to the total cost of the item and having a different useful life should be depreciated separately. Should be depreciated separately. Components should be identified at initial recognition. Okay, now I want to take up an example and explain this concept. Yamini, again, this is a query which I'll discuss. Don't you worry, I'll discuss. Okay, the two queries which I have parked, I remember each and every query which gets asked in the class. So don't you worry. The two queries which I have parked is change of accounting model from cost model to revaluation model. Is it temporary or permanent? Second query is depreciation methods. Okay, we can change frequently or we have to follow the same. Both the thing I have taken up, made a note of it, we'll discuss. But yes, just to give you a heads up on your query, as I told, the methods of depreciation are estimates. Okay, and it can be changed as and when the entity believes that a new method is more appropriate. Okay, Yamini? Now, moving on to this question. So what does the question says? Let's read the question patiently and try to solve it off. Okay. An A Limited has acquired a heavy machinery at a cost of $100 million. Okay. Now the asset is divided into two parts. The asset is divided into two parts. One is turbine costing $30 million. Another is rest of machine costing $70 million. So now this is turbine, this is rest of machine. This is turbine, this is the rest of machine. Now the estimated life of machinery is 10 years. However, the life of turbine is 4 years. Now the question says life of turbine is 4 years, but the life of rest of machine is 10 years. Don't you think it makes more sense to depreciate this part over 10 years and this part over 4 years? Tell me guys, come on. Now, what does the question says? Now, at the end of third year, something happened. But before that, year end 3, can you please tell me what is the carrying amount of the machine? Please tell me the carrying amount of the machine. The entire machine, what is the carrying amount? Tell me. What is the carrying amount of the machine? The entire machine, what is the carrying amount? I have already calculated. I need the answer from you guys now. Come on, come on, come on, come on, come on. Please tell me, guys. Come on. How come 70.5, Yamini? Again, review. I am telling at the end of third year. It can't be 70.5. Turbine, rest of machine. Turbine will be depreciated 30 by 4 is the depreciation per year. We have to depreciate over 3 years. So what is the depreciation? 30 by 4 into 3 is 22.5 is the depreciation of turbine. Rest of machine 70 divided by 10 into 3 is how much? 21. So this is the depreciation that we charge. So now what is the carrying amount of turbine and rest of machine? So turbine will be 30 minus 22.5 is equals to 7.5. Rest of machine will be 70 minus 21 is equals to 49. So 49 plus 7.5 is equals to 56.50. Is it clear now? Is it clear now? Is 56.5 clear to all of you? Is 56.5 clear to all of you? Very good. Very good. Now, let's read the question further. At the end of third year, the turbine requires replacement. Oh, what happened? This turbine requires to be replaced now. Now, what we have to do? We have to this one requires replacement. So now what we do, we will throw this one, we will throw this one. Okay, we'll throw this one. Okay, now we have to purchase a new one. So where is new one? So this is a new one that we purchased, new design. We purchased a new one, a new design. So we'll keep this one in this one, right? We'll keep this one in this one. So now when I de-recognize a machine, so what will happen? This will go off, tata bye bye. This will go off, tata bye bye. So now I will say minus de-recognize turbine. So minus 7.5. Now replacement means de-recognizing this one and bringing new one. Okay, now the turbine requires replacement. The remainder of the machine is perfect and is expected to last for the next 6 years. The cost of new turbine is 45 million. So now we will recognize new turbine. At what value? 45 million. So now tell me, what is the carrying amount at year end 3? What is the revised carrying amount at year end 3? What is the revised carrying amount at year end 3? Can you please tell me, guys? Can you please tell me what is the revised carrying amount at year end 3? What is the revised carrying amount at year end 3? It is 56.5 minus 7.5 plus 45 is 94. 94. Tell me, is it clear, everyone? Is it clear, everyone? Okay, now let us write it as A and let us write it as B. Can you please help me with the journal entries of A and of B? Journal entries of A and B. Karthik, why 86.5? We had 56.5 minus 7.5 plus 45 equals to 94. No. Yamini, okay, I'll explain it again. No need to worry. Just understand one thing. Yamini, think of it this way. We have an asset of 100 million. The asset was divided into two parts. Turbine of 30 million, rest of the machine of 70 million. We depreciate turbine over 4 years, 30 by 4 for 3 years. So multiplied by 3. So depreciation for turbine becomes 22.5. Now coming for rest of machine, 70 by 10 for 3 years is 21. So this is the depreciation for the rest of the machine. Now at year end 3, what is the carrying amount? At year end 3, what is the carrying amount? 30 minus 22.5 is 7.5. 70 minus 21 is 49. So the carrying amount becomes 56.5. Is it clear till here, Yamini? Is it clear till here, Yamini? Now, okay, now we have replaced the turbine. So the old turbine, bye bye. So old turbine, bye bye. Minus 7.5. New turbine, aa jao. New turbine came, recognized, plus 45. So 7.5 de-recognized, 45 recognized. So the amount is 56.5 minus 7.5 plus 45 is equal to 94. Clear? Chalo. Now, can you tell me the journal entry? So to de-recognize the old turbine, what we will do? Machine, we have to decrease. Now understand. To machine, because de-recognizing means we are reducing that asset by 7.5. Now we are de-recognizing means we are discarding it off. So it is a loss. P and L account debit. It is my loss. It is my loss. It is my loss. And B, we are recognizing a machine. So it is my machine account debit to bank 45. Is it clear to everyone? Is it clear to everyone? Come on guys, tell me. Is it clear to everyone? All of you? Okay, this is called as component accounting. This is called as component accounting. Okay, now we are keeping the class till here itself today. Okay, now let me give you the, see, the demo classes ends today. The demo classes ends today. Now from the coming week onwards, now going forward, we will have the classes as per the schedule. Now let me tell you the schedule. The schedule will be, we will have class on Monday, Wednesday, Friday at 8 p.m. Okay, we'll have the class on Monday, Wednesday, Friday at 8 p.m. India time. Additionally, we will have a query session or might be a practice session. Okay, or might be a test session. When? On Saturday 8 p.m. India time. What are the resources which we are going to use in our classes? The resources will be FR capsule book for the concepts. We'll use FR integrated question bank, which okay, for questions, which will have questions from BPP plus Kaplan plus study hub. Okay, now we will also follow syllabus mapping for all the technical articles and topic explainer videos. Okay, I just shown you the question also. This is the FR integrated question bank, okay, which has the questions, all the questions. Okay, no need to worry at all. Now further, this week since we have just studied 2 classes, so I'm not expecting that you have any queries. So now this week still we will have a Saturday session. Okay, on this Saturday session I will not be if you have any queries, definitely I'll take up. If not I will continue with my topics. Okay, I will continue with my topics on the Saturday's class. So as usual, we will have a Saturday session this week itself. This week also we will have a Saturday session, but in this week's Saturday session, I will, if you have any queries, definitely I'll take up the queries, and then going forward, I'll take up my topic. I'll continue with my topic. I believe you all enjoyed the demo, and that's all for the day. Thank you guys. If you want to enroll for the lectures, definitely you can. To enroll, you can reach out to my team at +918431384051, or if you have any queries pertaining to the batch, you can ask me as well directly, +918584012637, or you can visit our website www.vishaljain.com and enroll to our lectures. Okay, enroll fast, but because from coming Monday we will start our classes full-fledgedly. Okay, that's all for today, guys. Thank you. Bye bye. I hope you enjoyed the session, and yes, don't forget to leave a feedback in the comment box. Don't forget to leave a feedback in the comment box.